Proximate cause. Proximate cause is a claims-related principle. It was defined in a classic case of Palsy versus Scottish Union and National in 1907. In such a classic case, the judge came up with the definition of proximate cause, which is the active, efficient cause setting in motion a train of events bringing about a loss, without any other force influencing such a loss. In simple language, this means that the proximate cause is that cause which causes a train of events leading to a loss. Let us take an example. If there is a storm causing a wall to collapse and then a short circuit resulting in a fire, having firemen causing water damage, then of course you can easily relate to the fact that the storm was the proximate cause in this example, since it started off a train of events causing the eventual loss, which is water damage. Here in this case, the proximate cause is again the first cause setting in motion a train of events, earthquake. In this case, you will observe that there is a gap in the train of events. Fire damaged a wall, leaving this wall in a bad state of repair. Only several weeks after, a gale bringing this wall down. In this case, we cannot say that the fire started off the train of events, but it's the gale which caused the wall to collapse. Another example to demonstrate proximate cause is of a rider falling off a horse and injuring himself, lying on the ground in the cold, catching pneumonia and eventually dies. This is a case of proximate cause whereby the accident caused the death of the rider. However, it is not always the case where the proximate cause is the first cause. In fact, if we had to change the story of the rider and say that the rider fell off the horse, then was injured, taken to hospital, contracting a disease from a neighboring patient and also dies, in this contrasting case, you will note that the facts are not the same. Although we had the same accident, the same cause, and the same loss in which the rider also died, however, there is a new intervening cause. Would you expect an injured rider to be taken to hospital and eventually to die? No. Therefore, there must have been a new intervening cause, in which case the disease from a neighboring patient will become the proximate cause, and in this case will be that cause which has resulted in the loss, which is the death. Another example: war, air raid, blackout, and theft from building. In this case, it is not the war, but it's the theft itself which is the peril causing the loss. Another war-related example of proximate cause: in this particular case, the war was deemed to be the proximate cause. Another case taken from case law: fire, a mob gathered to watch this fire, riot resulted, glass damaged. In this case, it's not the fire that caused the glass damage, but the riot, and therefore the peril causing the loss. The proximate cause of the loss is riot. Next is indemnity. Indemnity is the way an insurer places the insured as before the loss. Indemnity policies are different from benefit policies. Benefit policies such as life and personal accident are not indemnity policies, in which case the amount being paid does not reflect the financial position enjoyed prior to the loss. In fact, in life assurance and personal accident insurance, the insured is given a compensation. There are different methods of applying indemnity. In fact, the option of providing indemnity rests with the insurer, which means that the insurer has a right to choose whether to pay the insured in cash, whether to opt for repair, whether to replace or reinstate as new. To indemnify an insured under property insurance, the amount of indemnity is calculated by paying the amount of a new replacement less an amount for wear and tear and or betterment if it is the case. In liability, the amount of indemnity amounts to damages and other costs. Indemnity may be limited up to the amount which is being insured. You will appreciate that the insurer will not pay more than the sum insured or limit of indemnity on the policy. Furthermore, some insurers apply an excess deductible or franchise, in which case an amount is deducted from the final settlement. When the insured is not adequately insured, the principle of average applies, which means if the insured is underinsured, the insurer will pay proportionately less should there be a claim. Furthermore, there are some property policies that come with single article limits, in which case the insurer will pay no more than the single article limit.